Good afternoon, everybody. Welcome to the midterm election session of the TraderMerlin show. It is your Wednesday edition. A lot more to go for this trading week, but a lot of fun stuff happening out there today. As you may have seen from some of my clickbait, I don't even call it clickbait because I actually do talk about these topics. Today we're going to talk about the red wave. I want something nice and dramatic there. So we'll start looking at that big picture. But welcome, everybody. Good to see everybody. Hope you enjoyed that session that we had this morning with Todd Davis, Larry Jacobson, and myself. Just kind of higher level what this all means to us. And I saw earlier on, I believe the gentleman's name, let me get this right here, Iron Addict says, for the record, I never heard red wave except for on FinTwit. Well, I'm surprised because it's a pretty common phrase out there, and given what's been going on with the current administration, there's a lot of upset. Some people support it, some people are upset about it. But the belief was that because things aren't going as planned, the economy looks like crap, that the red wave, meaning that the Republicans would take a lot of seats in this election. And I can show you right now what's going on. Right now you have in the Senate, and there's still some to go, there's 4 left to report, basically the Democrats gained a seat and the Republicans lost one. But that's not really the big story because we still have a split Senate. When you move over to the House of Representatives, that's where the picture changes quite a bit. The Democrats have lost 7 seats. The Republicans have gained 5. And you need to have 218 have a majority. So it's still possible for the Republicans to have a majority of the House. But right now, it's getting down there. You've only got like 40 seats left to claim. So we could certainly see the Republican take over that House of Representatives. Bottom line is, do I care? No, I don't. As I mentioned earlier, I went out, I voted for the people that I thought would do the best for my country and also fit my personal interests and things that I, find interesting, whether that's women's rights or healthcare, inflation, digital assets, and I think that's the important part. So this is not going to be a show about the Republicans having a landslide victory in the election because there is no landslide victory one way or the other. What we are going to see, though, is a red wave coming out in a different form. In this case, I'm talking about a red wave that looks like this. Here is your S&P 500 mapped out, showing you all of the different companies within the S&P 500, and you'll notice very few green ones. I'm actually rather fortunate today. Meta, because of their announcement, which I will talk about here shortly, they had a nice pop to the upside, and I sold all of my call options. So as you guys know, I was long some call options. When they made that announcement that they were going to lay off 13% of their workforce, I just sold all my call options and had a very nice day. And good news was it started to sell off right after I got out of it. So awesome trade there. But I wanted to show you a different graph. This is from FinViz, which I would highly encourage everybody to check out. This is a great resource for everyone. But if you look at this bubble chart, this is kind of a cool one too. What they do is they break it up by sector. So each color grouping is a specific market segment. And then you can see on the left-hand axis here, gain or loss. And this is just for the day. I'll put a horizontal line here in white at 0. And everything above that was positive for the day. Everything below it was pretty bad. Most of that stuff looking negative on the day, and the size of some of these bubbles would be like Apple. It shows you the market capitalization. So really a bloodbath out there in our current markets. That's a tell, and I approve. Not necessarily, it's funny because, you think that polarizes me and says, oh, well, women's right, you must be a Democrat. Well, that's not necessarily true, but we won't go into the political side of things. Bottom line is we all have our opinions. Let's keep the opinions out of it here for the show and focus on what we can do to make money in the world. All right, so with that note right there, I will dive deeper into this, what happened, why it's important, but I do want to put this poll out here, and I will leave this here. I may actually do a full... If I get an overwhelming yes on this one, I will do a full show on it tomorrow just because it takes a long time to explain this topic and really understand exactly what's going on with FTX, with Binance, with Alameda Research. You're witnessing what is actually an unbelievably ground-shaping foundational piece for cryptocurrency and digital assets as we speak. So, yep, I agree, Singy. FTX, it's funny, they showed some true colors there. They were kind of hiding behind the wall of numbers, and those numbers came crashing down. In case you guys were wondering, Sam Bankman-Fried, the guy who is heading up FTX, his net worth as of 2 days ago was I think $15.6 billion. Now, Bloomberg still has him at $900 million. However, given all the loans that he owns to other people personally, he has a negative $200 million valuation. So, if you think you did bad today and you lost a few $100 or a couple grand, just think he's down roughly $16 billion and is now technically worthless and in debt in less than 48 hours. Man, my day could have been a lot worse. Just always think about that one. Okay, so let's start off with maybe what caused some of this. Obviously, I think the election, the uncertainty of the election is still driving it. I believe, just from a high level, I believe a lot of the industry was believing that the Republicans would have gained a lot of seats in the House of Representatives and in the Senate and taken control there. And with that in mind, the belief would have been that this would have been good for the markets and good for the economy going forward. Less taxes, more spending, let's get things back on track. That didn't happen. I think once the numbers started to show that it wasn't as much of a landslide victory as a lot of people were expecting for the Republicans, we started to see some decent market sell-off. So let's go in and look at some of these pictures here and see what's going on. Let's go to that chart there. So that's a 5 minute. I'll go to the daily here. When you look at the end results, it wasn't like a catastrophe, unless you're in crypto, right? Crypto is just absolutely just unbelievably bad. And Solana, oh yeah, crypto. If you're trading FTT tokens, if you're trading most of cryptos, especially Solana, yeah, you're getting destroyed. And I can explain all that maybe on that show. It looks like a large majority of people want me to do it, so I will most likely do that. Okay, let's run through from bottom to top here. Certainly, crypto is the sore subject right now. I have a heavy position in crypto, or heavy portfolio, and you notice that with Bitcoin in the last 48 hours, we were at 21,000. Now you're at 15.6. I still think 10,000 is in play. I still think there's a long way to go. You probably will see more liquidations, more forced selling from institutions because of these margin calls, etc. So if you're long crypto, this is not a good day or a couple of days, and the future doesn't look that bright. I'll step back here just a second to look at the weekly time frame. And you're looking at my two levels I've got mapped out. I've got 13,735 mapped out as my next stop, which we got pretty close to today. But I still think that $10,000 is in play. That's kind of scary. I did buy more Ethereum today. I'll probably buy some more Bitcoin here in the next couple weeks or so. But is crypto having an issue with liquidity? No, not necessarily. It depends on the crypto, Robert. So it depends on the crypto, and it depends on the exchange that you're trading on. So if you're trading on, Binance, so you're trading Bitcoin, you have so much liquidity out there, it's not a big deal. Singy says Sol is done. I don't know if it's done, but it's been one I've been very negative on for a while. It's centralized, it's got all kinds of buggy problems, and it's backed by venture capitalists, including Alameda Research and FTX. So lots of problems there, and just so we can show you that one, let me real quickly bring up Sol here, which lost its soul. But thanks, folks. I'm here all night. This thing, if you go back into November, Solana, which everyone said is the Ethereum killer, was right around $260. Now you're looking at $12. I mean, that is a hell of a deal. And if you believe that Solana has potential, and I do think that it has potential, but it's down 95%. Could it disappear? Probably. But I don't think it'll disappear. I don't think it's done. It's just going to have a struggle, and right now it's fallen out of favor. But, that's just my opinion. It could be done. Who knows? This crypto world is obviously crazy right now. So let's move up our list here and go away from the depressing subject of crypto, which, judging by your responses, let me go here and show you the end of the poll. 81% of you said that you would like me to do an in-depth explanation of what happened with the crypto market. So I will make it my point for tomorrow to prep for you and probably do a 30-minute session on how this all transpired, what it means, and I'll be honest, I think what you witnessed, once you understand it all, is such a brilliant, absolutely brilliant, just business move. It was a chess game that was being played between Sam Bankman-Fried and CZ of Binance, and that the way it ultimately ended up, you just got to take your hat off and be like, CZ, cheers to you, dude. You annihilated your competition. You literally just stepped on their jugular and absolutely crushed their competition, and then volunteered to help them survive. That was pretty awesome, which, by the way, is not going to happen. But we'll talk at length on that tomorrow. So let's move on. All right, moving up our list, crude oil. You saw the crude oil inventories were up quite a bit today. I think there was a negative expectation for crude oil inventories. We came out at positive 3-point-something million barrels on that report, which certainly had a little bit of pressure to the downside here. Dropped at 3.46%. This is the weekly. Let's go back to the daily. Okay, CZ did Warren Buffett. Yep, absolutely. It was ultimate, right? It was incredible what he did, and you understand how it all transpired. It was brilliant. I mean, honestly, this should be talked about in financial school textbooks. It was awesome what he did, and he says it wasn't planned, it wasn't malicious. Yeah, right, man. You get my vote for man of the year right there. Anyway, let's move up. There's your crude oil. You can see the big drop today. However, you don't get panicked yet. You still are making higher lows on crude oil, even with the big drawdown today. From a technical perspective, I could go out and say, look at the lows here. If you connect those through these lines, you are making really what looks like a potentially ascending triangle here. So let's not get too excited on it yet, but it does look rather positive, even though you're down 3.46% on crude oil today. Let's keep an eye on what happens over the next few days. If we start to stabilize and drift back up, then get a break above 93.60, well, it could be a nice move up for crude oil. All right, Russell, 2000. They will make a movie about it. You think so, Les? There's definitely going to be some movie about crypto and what's been going on. It's unbelievable to watch it all happen live, real time, especially since I have a bunch of money involved. Now, nobody likes to lose money, and I can assure you that the last couple of days have been rather painful for my account. But again, I started buying back my first one was 2014, but I really started buying back in 2017. So I feel okay, and I'm still green, but boy, giving back quite a bit of those gains. All right, moving on to Russell. Major indexes here took a dive as well, but you notice the Russell is still holding its own, right? It had a nice rally up, but we've seen over the past week and a half a pretty sharp move down from that 1880 level, currently trading at 1763, down 2.75% today, but still 1640 is the number that I think is the critical one here for the Russell, and we'll have to wait and see if it actually breaks that. All right, NASDAQ, and just to throw it out there, I bought today. NASDAQ calls for May at a triple Q calls today. I don't remember my strike price off the top of my head because I made a few trades, but I'll explain why in just a minute. You're probably thinking, what the hell are you doing, Merlin, buying call options on the NASDAQ 100 for March? That's nuts. Well, don't worry. No, Jimmy, in some of my I did have them and I got out of some of them, but most of it I'm long-term. Even though I know it's going down, I'm still okay holding it. I know, it's crazy. All right, NASDAQ was down 2.38%. From a technical perspective, it looks a lot worse than the Russell, right? The Russell was made much higher bounce off those lows. NASDAQ has not, and certainly that's being fueled by the negativity out there in the major players in the NASDAQ, which are Tesla, Microsoft, Amazon, Facebook, or Meta. Even though Meta rallied today, you had a pretty significant drop in a lot of the other ones, which dragged down the NASDAQ 100. S&P 500, still better than the NASDAQ, right? This looks very similar to the Russell 2000. We had a nice move down today. Again, I am going to keep on preaching this blue line here, which I do think is in play. We'll just have to wait and see how it ultimately pans out. But I'm going to present some statistics and numbers today to you that are going to kind of shock you and maybe change your perspective of these markets overall. So we'll bear with me as we get to that a little bit later on here. About the 95 February Amazon calls it. Nice, Big Eb. I've actually got, I think, I have so many different things going on. I think I have the 110s, which are crazy, but I have the Feb 110s as well. But I'm down on mine. I lost a bit today, but I'm gonna hold them for another couple weeks and we'll see what happens. So S&P, get to that one. S&P looking better than the NASDAQ, but right in line with the Russell 2000. Again, we got to see what happens if it gets below these lows from last week, getting below roughly 3,700. Dow was your best performer, only down 1.95%, and overall looks great. You know, we had this red line drawn here at 33,255. Hit it yesterday, and now an aggressive sell-off from there. The question is, does it continue to sell off or rally right back up? We'll have to wait and see on that one. And finally, gold, barely down on the day, down 0.13% for the session, which, heading towards the supply level that we have back here in October. Kind of expected it to stall right there. I actually expect gold to kind of chop back and forth here for a little bit, but the good news is it did break this downtrend line that I drawn in a couple days ago, showing the pressure pushing it down, which almost looked like a descending triangle, and now we've broken out of that, which is a very positive thing for anybody holding a long position in gold, including myself. I am long on gold. There you go. That's your top 7. Part of the reason you saw a nice little pop. Here's your dollar index. It's still in this slow downtrend channel here, right? It's just it did bounce today, but it has not been able to break those highs over. Let's call it 113.50. Some people might actually call this a pennant formation, not a pennant formation, excuse me, a flag formation where you just kind of have it channeling down here. Well, we'll have to see if that continues to hold, but dollar index popping up like that certainly put some negative pressure on the markets and our bond markets as well. Here is your bond. Nothing overly exciting there, but if we do get this continued pain, you'll probably see these yields move to the upside. Am I optimistic for the market after the election? 100% up chance in 6 months in all the past years. Yes, I am optimistic for the market. It's tough, and this is part of the session that Larry and Todd and I did this morning for Online Trading Academy. I look at the preponderance of evidence. I mean, the landslide of evidence that's saying markets are going down, right? It's almost irrefutable. Even Jerome Powell's just saying, yeah, we're going down. Unemployment's going to rise. You're going to feel some pain, blah, 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 blah. But there are statistics, and I love stats. I'm a big fan of stats because opinions are like buttholes. Everybody's got one, right? However, facts are facts. You can't modify that. It's going to be the numbers say something, and that's what the numbers mean. So I wanted to show you this, which I showed this morning, and it's going to be a little confusing for me to read because I usually hide things so I can reveal them. But if you look on the left-hand side, that's election day. And there's been 18 midterm elections since 1950. And if you notice, 1 month after the midterm elections, right? Doesn't matter who wins. Doesn't matter who's the president. Doesn't matter who takes over the Senate. Doesn't matter who takes over the House of Representatives. It could be a Green Party landslide and they take over every business. Does not matter. It's just a fact that when these midterm elections end, let me ask you, when the midterm elections end, what also ends? Right? There's something that's been going on for months now, and that is officially going to stop. What is it? You guys tell me what you think it is. It's going to end. It's still going on in a couple states. I believe that, South Carolina or Georgia with Herschel Walker and the other guy is still kind of ongoing and contentious. But ultimately, it's uncertainty, right? That is going to be removed. It will no longer be a discussion of, oh, well, if a Republican gets elected to this position, then it's going to do this. Or if a Democrat gets elected, oh, well, it's going to do this. There's all that disappears after you finally have them in there. Yeah, no, Lisa, I think the fighting will always stay there, right? You'll always have Democrats hate Republicans, Republicans hate Democrats. Cats hate dogs, dogs hate cats. No, actually, a lot of dogs like cats and a lot of cats like dogs. But the uncertainty disappears. Right? That's the part that's important. And I think because of that, it's a collective sigh. Like analysts, market makers, businesses can all look at the administration and say, okay, we now know where we stand. We now know if the people that we paid off to be put into office are going to get those jobs and maybe can help our businesses out. So I think that the 2024 election crap begins through. I know. And it sucks. I just hate these things. I really just hate the hatred of elections. It really polarizes people and makes somebody go, oh, well, I hate you because you voted this way or that's your stance. We're all on this planet together. I mean, let's just get along. And if we don't like our current administration, then shut up and vote on it, right? There you go, Jimmy. The Giants fans will always hate the Dodgers fans, and the Dodgers fans will always hate the Giants. That's not going to change. So if you go 1 month after the elections, we remove the uncertainty. What's mind-boggling here is 77.8% of the time the markets are up within 30 days after the midterm election. So that's starting today, right? That means in the next 30 days, there's a 77.8% chance, going back to the 1950s, that's 72 years, that we're going to see a gain in the marketplace. 77.8% possibility. Honestly, if I'm a trader and someone gives me 77.8% odds of something happening, I'm going to take that bet. Because in reality, trading is a coin toss. You could really say it's a 50-50 endeavor. The reason why most people lose is because they have no risk management, right? Once they have that 50-50 coin toss, if I flip a coin and I say, okay, my rewards are going to be 3 times my risk. If I do that and I flip a coin, I'll probably make money over time. But now if I can shift that equation to a 77.8% probability of something happening, my odds of success increase dramatically. Because remember, that's for the S&P 500. 77.8% of the time, it's moving up. And by the way, the average there for the next 30 days is 1.5%. Not huge, but certainly annualized, that makes for an 18% rate of return. That's great. However, if the S&P moves up 1.5%, you know darn well that within that, if we fragment the market segments and look at things like healthcare, technology, consumer staples, utilities, real estate, there's going to be some market segments that are going to be higher than 1.5% gain, maybe 3, 4, 5, 10% gains, and others that are going to be laggards. So this is where our skill set comes in and says, let's find out what might be those market movers. And I think some of that does directly tie into who is ultimately put in office and what their administration or what their platform generally supports, right? Generally, Republicans are going to be very pro-energy. Okay, great. If we see a red wave in the House of Representatives and the Senate, maybe start loading up on energy stocks again because they'll be more lax with rules for energy companies. Now, where it really starts to shine and make my jaw drop, honestly, I saw that somebody quoted it in here early on. Let's see. I think that was from Algebra. Were you in the session this morning, Algebra, with Todd and Larry and myself? Is that where you got that stat from? Because it's from Trader's Almanac, which, by the way, again, I think you should all get in there with Trader's Almanac. It's awesome. Yeah, Big Eb says, I'll take the 80, 89, and 100% over 6 months. Let's jump to 3 months. 3 months is this one here. Unfortunately, I don't have my drawing tool set up. The red line is 3 months. Oh, gosh, it's hard to do. This is where the numbers really start to look good. So I think everybody in here would agree that if you got a 7.71% rate of return in 3 months, pretty much I'll load the boat, right? You annualize that, you're looking at 28%, you compound that over time, you're a gajillionaire. So 7.71% is the average rate of return for the 3 months after the midterm elections, and better yet, there's an 88.9% of it being a positive return. That blows my mind. Like those are numbers that that's irrefutable. It's only been down twice. You can see right here. You had a negative one of 7.84% in 2002. You also had a negative one of negative 0.87% rate of return in 2018. Well, over the course of time, you've had some pretty big gainers. 3 months, you see a 15% gain here, 15% here, 14%, 13, 14, 14. I mean, there's some biggies, but the average is 7.71% rate of return for the S&P 500 in the 3 months following. Now, here's where it's just mic drop, right? I'm going to just put it down here at the bottom so I don't have to do the big circle thing. Right here, you see 100%. That means that there has never been, and maybe I'm jinxing it right now like the sportscaster going, he's never missed a field goal from this distance. Well, maybe we just jinx it. However, there's a 100% historical probability that the markets are up 6 months after the midterm elections are done, which means April, you should see the market up, and the historical average is 14.52%. I think that is a pretty awesome number to have. I, for one, would love to have a 14% rate of return in 6 months. Very happy with that. Now, granted, I would like more. Shinobi sounds a bit like 1.5% per day. You know that's not impossible, but there's no way that's not going to happen. We could calculate this out to a per day rate of return, but it certainly ain't going to be 1.5%. Bottom line is these statistics are pretty eye-opening, and when you look at the current market, that's where I'm challenged. This is where I have my major problem right now is I'm looking at the macroeconomic picture, Jerome Powell, I'm looking at unemployment, interest rates, bond markets, collective uncertainty in the globe, tensions. That's all negative. And then I look at this statistic that says 100% of the time in the last 18 times we've had this event happen, which is midterm elections, we have a 14.52% rate of return average over the next 6 months. So yeah, got to figure what camp do you guys put yourselves in? Do you now hang your hat on these statistics, which are pretty clear that there's, historically there's going to be a nice market rally for the next 6 months? Or do you look at it and go, this is the time that we don't get it. This is the one time out of 18, will be out of 19 now if you include this one, that we missed the mark. I don't know. What do you guys think? Think we're going to, will we achieve or miss this mark of 14.52% in 6 months? I guess I need to map out what the S&P is doing. Let me see if I can add it as a poll. I'll start a poll here and I'll say, oops, sorry, I got to type and talk at the same time. 14.52% next 6 months. Sorry for my typing. I'm absolutely, doing this and talking is kind of difficult to do. Will we see market gains of 14.5? Well, I put 14.52% next 6 months. Yes, my spelling's atrocious, but you try talking, typing, and switching a show at the same time. But apples to apples, inflation, huge debt, housing price drop, do all these things get taken into consideration? No, right? And that's the problem. When you look at those numbers that were there by Trader's Almanac, I'm sure at many of those, there were these issues, right? If you go back into the 80s when they had 16% inflation, that's way, way higher than what we have. That was 82 and 86. Well, bottom line is 6 months after 1982's midterm election, let me just show you. 6 months after 1982's midterm election, you had a 17.91% gain. And then also, in 1986, when it was soaring, you got a 17.58. And then the one right after that, 21.97. So, I mean, those were, 12 years of just, holy cow, amazing rates of return. So, I'm not here to sway anybody's beliefs. I'm just showing facts and figures. And because of this, I bought 10 NASDAQ 100 call options for March. I was going to go to April, but I ended up paying, it was like $9 for these bad boys. And what number did I pick? I got too many numbers in my head today. Let's bring up your market, bring up the triple Qs. And I think I did the 280. I'm not sure. I believe I did the 285s, which would have put, no, it had to be higher than that. I did 10% higher, which would be 263. Maybe I did do the 290s. I think I did the 290s. I'll have to log in and check for tomorrow, but I think I did the 290s, which I could easily see that happening. Easy. No problem. But we'll have to wait and see ultimately what happens with it. Everything is so negative that makes me go the opposite, and that's kind of what my point is here. GS is, God, everything looks negative. Everybody's lowering their forecasts. Almost every analyst, including Jim Cramer, is saying markets are going down. And to me, that is why the markets are going to rally. It has nothing to do with the statistics. Has nothing to do with Republicans, Democrats, elections. It's because Jim Cramer says markets are going down. We're going to rally. We're going to see a big rally from here. Damn you, Jim Cramer. Oh, man. I think it's, I don't know if you guys saw the meme, and I'm not just picking on Jim Cramer. I've been picking on him for years, so it's not like I'm just starting to do this. You guys know me. I think Jim Cramer is kind of a clown. However, there was a great meme that says, hey, Jim, remember, Jim is usually wrong. I said, hey, Jim, could you do me a favor and please tell me the 6 numbers that don't stand a chance of being in the lotto? I thought that was great. Oh, yep, exactly. Oh, Jim Cramer. Anyway, I thought you guys might find that interesting. We look at some of the data and the pictures and the economic announcements. I wanted to show you one other picture as well. As you look at why these markets have been selling off, we have tons of things to point the finger at and say, well, this is why. Here's an interesting one, which deals with the performance going on in the tech sector. And I think this is critical. So what you're looking at here is this gray line is broad SaaS. This is software as a service. So basically it's looking at technology firms and software companies. And you can see that they have been sharply declining. And what this is, it's enterprise value divided by the next 12 months, NTM revenue. And the expectations are just plummeting right now. Back here in 2020, in late 2020, we were looking about 16.6 times enterprise value divided by next 12 months revenue. And now it actually is plummeting, and now it's at 6. And the trend looks like it's heading down. And on top of that, you can see the 10-year Treasury yield, which of course has been soaring. And I've mentioned that that's one thing that really slows down the growth of businesses. And I think this is what we're starting to see is that yield, the inability for companies to borrow cheap, or the fact that companies now have to pay a lot more money to get money for their businesses, pay more yield, is starting to choke those out. And we're seeing those numbers reflected with some of the announcements made by Facebook and Amazon and Google, the big tech firms that we rode the coattails of that going up. Now I think you're going to start riding the coattails of those as they drag most things down. Today, one of the questions I got from a buddy of mine was like, dude, you had that huge pop in Facebook today, or Meta. Why did you get out of your call options? And I was like, well, listen, it's buy the rumor, sell the news. Yesterday we talked about rumors about Meta making layoffs. And there was a nice pop yesterday. Well, check out what happened today on the follow-through from this. As you guys may know, Meta said we're going to lay off 13% of our workforce. I think that's roughly 11,000 employees. They got a pretty good severance package. That's nice. But here's Meta. You had that pop, and I talked about it closing this gap. Personally, I don't think it was going to close this gap by let's say by the end of the year. I was kind of waiting for it to fill the gap a little bit, and I was very fortunate today because I sold out when Meta was at 104, back down to 101 right now. But that was a sell the news event, right? If you look at what went on volume-wise, you had a spike in volume, and generally things will switch directions after a spike in volume. I had good news on it, so it was kind of the perfect time to get out of Meta. If anything, if I'm looking at this going forward, I may actually be thinking, like Lisa may with this beautiful shooting star, I may be thinking shorting this bad boy. I'm out of it. I have no vested interest in Meta. Let's just snap this on here. And if we snap to, why is it not snapping it on there? It should snap it right to here. If you get down below, let's call it, 101, you have a pretty good chance of filling this gap that it created today. And buy the rumor, sell that news. So that's the main reason I got out of it. Tesla at 150. Yeah, I'm probably going to get stung. I'm really surprised the way this thing has fallen so fast. I have 180. Yeah, I have 180 calls expire next Friday. Those are probably going to be put to me, but I did gain like $7 per contract, which means my average price is 172. Not looking so good right now, but we'll wait and see. I'll ride this one out, and certainly the pain that Tesla is feeling will probably continue. I'm waiting to see if we hit 350 again for my SPY for some leaps. I think you'll ultimately get to 350, but I'm torn. I'm really torn right now based off the statistics after the midterm elections, which look so positive. Everyone is so negative on the market, including myself, that I really feel like that there's going to be some kind of surprise rally here just to catch everybody off guard. And maybe the ending of the midterm elections is what does that. It really kind of gives people that confidence that things have been, they're changing and things are looking better. Who knows? But that's where we stand. Okay, so let me go into, that was your red wave piece, and I know it was kind of misleading because people probably wanted me to go deep into Republican this or Democrat that. I don't care. I really don't care. You guys can be Democrats, can be Republicans. It's totally fine with me. Good for you. You're all good people in the trading world. Let's not be hostile about who we vote for our parties. Just vote so we make sure our country hopefully is the way we want it to be. All right, end of the result. Will we see the markets? Will we see the market gains of 14.52% next 6 months? 55% said no, 44% said yes. I got to I'm putting myself in the no category just because I see that kind of surge in the market yet. I still think we got a ways to go before we get past the major pain points of our economic data and the Fed, which don't fight the Fed, and they're pushing markets down. Let's call it what it is. If you look over here on the CME Fed Funds Futures, you guys will notice that the December 14th meeting, they're still pricing in 56.8% chance of a 50 basis point increase. But it has been increasing for the 75 basis point. A month ago, we were at 23%. Now, all of a sudden, it's 43%. So it's slowly creeping up that 75 basis point increase. Now, some of you did mention the elephant in the room that Chase says. CPI is the elephant in the room. It's two, right? It's two numbers. It's CPI and PPI combined. It won't be one or the other, but those two numbers representing inflation for consumers and for producers. Yeah, it's one of the elephants in the room, right? It's one in the room. Certainly, the pressure that the Fed is doing, I think, will have an impact on CPI going forward. But right now, I don't know how those numbers are going to come out. We can go look at the economic calendar here real quick, just to bring this up for you guys and look at tomorrow's trading activity. Bear with me as I get it all set for you here. So here is your Thursday announcement. There you can see the CPI. They're expecting it to increase, which is kind of interesting. They're expecting the month over month to increase. They're expecting year over year to decrease, which is interesting. I don't quite get that, but okay. Here is the expectation. We've had that huge rally up, slowly pulling back. Anything above 7.9 is going to cause this market to have a knee-jerk reaction to the downside, right? If anything below 7.9% tomorrow will cause the market to sell off, because that means that the Fed Funds Futures will shift more towards the 75 basis point rate increase. What the Fed wants to see this consistently drift down every reading, every month. They want to see this drift lower and lower and lower and lower till ultimately we get to their target, which is 2%. Which, come on, I don't think we're going to get to 2% anytime soon, but that's it. Meta may go the way of Yahoo from here. It could. I think they're too invested in different things. I mean, look, Yahoo went private, but Meta is I don't know. I think Meta is probably not going to disappear like that. I think they just make way too much money and they get way too many businesses under their umbrella. How does that math work? Is that from Uncle Joe? Oh yeah, you talking the CPI numbers, Big Abby? That's not from Uncle Joe, actually. This is from the Bureau of Labor. If I remember correctly, CPI is Bureau of Labor Statistics. Is that what's? I think it's the Bureau of Labor Statistics that puts that one together. And I interviewed a guy years ago on Power Trading Radio with John O'Donnell, and I asked him. I said, "Do you guys manipulate that data?" And he said, "Yes." And I went, "Whoa!" I was shocked that he even admitted it. He was formerly an employee at the Bureau of Labor Statistics, and said, institutions, market makers, brokers, analysts, myself. We're all looking at that economic data as a measurement of the health of the economy and basing our investment decisions off of that. How can you just arbitrarily change things? As well, we're kind of directed to fit political agendas. And I was just like, throw my hands up, like, well, I can never trust this data anymore. After I had that interview with this guy, I'm just mind boggled that, we still look at these numbers every single day. So, they'll remove something or put something in to help dampen the blow of CPI number inflation pieces here. Yeah, revised numbers, Iron. Yeah, it's not even revised. It's just they're modifying the basket. If I got a basket of 20 different goods and services and I can look at one of them and say, I'll use Advil, right, since I got Advil right here. Let's say Advil's gone up 100% in the last year. Well, you know what? I'm going to take Advil out and I'll put in something else that has dropped in value. And all of a sudden, those metrics change right away. Creative accounting, they would call that from a CFO perspective, right? Best thing that happened to Meta is Zuckerberg finally take responsibility. Yeah, I agree. I think that's good that he did take responsibility. I'm not a big fan of Facebook. I only use it to promote this show. I rarely ever post pictures or do anything on social media. It's just not my thing. But hey, I'm glad that I could cash in and make a couple of chips on the nice little pop that happened because of Zuckerberg laying off 13% of his workforce. It's funny, the workforce, the numbers, I don't know if you guys saw, he had a big list there was a picture going around stating exactly what the employees would get or got from their deal. It's not too bad of a severance package there for sure. Okay, Karen, you asked this question. I'm going to answer this in depth tomorrow. I had 2 Ethereum at FTX and now can't access it. What do you think will happen? Am I screwed out of my money, or is there a chance of getting it back if Binance takes over? I will just tell you this right now. There's no chance in hell that Binance is going to take over FTX. Not a chance. No way. No way. It does not, unless he says, I'll buy it for $1, right? I forgot who it was. Somebody actually came out. It was a major news agency, did an analysis of the books, and they actually think that FTX is worth $1. But I'll talk more about that tomorrow. So I hate to say this. You're not going to like me for saying this, Karen. I think you're screwed. I think that money's gone. Keep trying to pull it out of there, but I know they've frozen withdrawals. They froze them internationally. You could still get U.S. as of yesterday, but I think they've now subsequently stopped that because they realized the company's insolvent. The money's gone. There's just nothing there. Depressing. The point I'll make for anybody here who's in the crypto space or digital assets or looking to get into it, choose your exchanges and where you keep your crypto wildly. My brain's moving. Keep your crypto off of those exchanges, and if you do keep it on exchange like Coinbase or Kraken or Binance, and those 3 I think are safe. If you do keep them there, be very careful. If you're keeping it anywhere else, do your due diligence. If they're offering great rates of return and have all kinds of crazy derivative products, you probably want to move away from those ones and go to cold storage. Keep them on your little storage device and keep your private keys for yourself. This storm will pass. It's just going to take some time. This is a pretty damaging piece. This is worse than the Terra Luna UST collapse. That was just an outright scam. What you have here is institutional fraud. It's going to be interesting to see if Sam Bankman-Fried actually goes to prison for this. We'll see. I did hear that CZ basically said, I'm backing away because of regulatory pressure. He cited a couple things, but we'll cover that tomorrow. My ledger came up with a message saying the FTX swaps are no longer... no surprise there, right? Everybody's going to sever ties immediately with FTX. That's dead in the water. And it's insane to see that happen in such short notice. Here's a question from Glenn. So the other day I was looking around the internet and I came across David Warner's new site. So I signed up for updates for his stuff. Now I'm getting blown up with emails and texts from his partner. Oh, sorry about that. That's why you should always use a junk mail account. Always use a junk mail account, people. I have a junk mail account. It's newdynasty@yahoo.com. Don't send anything important there. That's my spam filter. I forward all junk to that. It's trash. So anytime you sign up for a newsletter, subscription, you should do it with the junk mail account. And if you really, really like the stuff you're getting, you can always forward it or re-sign up with your real legit email address. Just have a spam account. Anyway, I asked about volume trading flow on your show. I was wrong. He says he can teach me order flow and tape reading. Not really interested in paying him to teach me, but curious. So what is order flow and tape reading trading, and what does it look like? Okay. I have made fun. I think I may actually know who this individual is. I will stay away from mentioning his name. But the truth of the matter is this. The guy is full of shit. Done. Don't pay a penny. Do not spend 1 cent on anybody saying that they can teach you order flow or tape reading. That's a dead art. That's like saying, I'm going to show you how to take, that would be, I was going to say, that's like saying I could show you how to take a stick and a rock and start a fire. But that actually has value, right? If you're in the wilderness, you could use that as a survival technique. But I don't know, imagine something that's so outdated that nobody even would remotely consider it anymore. It's like saying, I'm going to show you how to respond to a pager. Well, you can't even get a pager anymore. You don't make them anymore. So stay away from pagers. So this guy's trying to teach you something that is done. You can't trust an order book anymore. So an order book, reading order flow says I can see all the orders coming in. And it lines up on an order book so you have your buyers and sellers line up. Problem is now, those are all automated electronic networks that are anonymous. Now, you go back to the late 90s and I was doing this, absolutely order flow was critical. Tape reading was an absolute art. It was brilliant and it was a huge advantage for anybody day trading. Nowadays, screw this guy. No way. Sorry. Nope. You're not teaching me order flow or tape reading. And understand, if you're reading order flow and tape reading, a lot of times things are so automated that you're going to get confused by those prints anyway. So nope, stay away from it, Glenn. It's not worth it. Save your money. I could probably do a show on tape reading and order flow here. It's not even worth your time. Nobody uses that anymore. I mean, unless you're swinging 50,000 shares of a stock and you're trying to capture a dime or a nickel, great. But it's still so hard to do. It's not worth your time and effort. Anyway, let me get out of that one. Is that the person whose name rhymes with? No. It's not Sam Seiden. Sam Seiden's too stupid to understand order flow. He barely even understands how to read a chart. There's supply and demand. This is my zone. That's all Sam knows. He doesn't know squat. No, order flow is tape reading and really looking at level 2 screens. It was somebody totally different. So no, not Sam Seiden. Level 5 order flow, there's level 2 order flow, and then there actually was what some people would call a level 3 order book, which was what they call a NASDAQ Workstation 2, but again, nobody's using that technology anymore. It's outdated. All right, let me go. Scott, you asked me this. Would you call this a double bottom on the NASDAQ? Some people call it a W formation, double bottom. Well, look, let's go bring up the triple Qs. Would you call this a double bottom? I mean, sure, you could call it a double bottom if you want. I just, I don't know if I would call this personally a double bottom. And it's all just subject to your interpretation of it. Let's just do the yellow box here, as I love to draw on charts with yellow boxes, and we'll do that. And what I want to do is just isolate what's going on within that yellow box, right? What's really happening here? You have lower highs, you have higher lows. It feels like it's kind of compressing here just a little bit, so not that, it's nothing really exciting. Because this opening was down here on the triple Qs was so much lower, for me, a double bottom needs to be right near the same. It needs to be near the same level. So if this came down to the bottom and then started to bounce up, sure, I'd call it a double bottom. But I guess ultimately, what does a double bottom mean to you? Because a double bottom, let's just take this and click that, and I believe I can do this. Let's say it does this. Boom, and then goes to here. Now it's a double bottom, right? Because it hit exactly. But, what could easily happen is now all of a sudden you get this. I got a triple bottom. Or I have that, and then it comes back here. Oops. Comes back here. And now what do you call this thing, right? So it's more of a frame of reference. Yes, it's a double bottom, but it could lead to a triple bottom. I think as we do analysis on these types of things, it's important for you to look at not just, it's a double bottom, because I think that is a valuable pattern to look at where to buy things. You look at what happened with GLD, for example. If we go to right here, that's a double bottom. That's about as good as you're going to get of a double bottom, right? But did it start to rally out? No, it rallied a little bit, and then all of a sudden, you have this open out below the bottom. That would technically have stopped you out. So even though you had a nice double bottom pattern figured out, it didn't work. Would you call this right here a double top? Yeah, but this is better because it rallied up into a supply zone. It's in a downtrend, rallied to a supply zone. So I'm going to put way more emphasis on this little double top here versus this double bottom. This is catching a falling knife. Now, if this level here lined up with something else that was historical demand zone, then I might put a little more emphasis on it. But don't put all your eggs in that basket of, oh, it's a double bottom or a double top and it's going to rally from there. Well, maybe not. That's why you have stop losses in place. So if you're wrong, it's okay and you can move on to the next trade. But no, I personally really wouldn't call this a double bottom on the triple Qs. Not for me. It has to be closer to that low that we saw back here on October 13th for it to be a double bottom, in my opinion. And again, this is just opinions. There are people that will look at Picasso's Guernica picture and think it's one of the most amazing pieces of art out there. Others think it's absolutely stupid and why would you even call it art? Well, beauty is in the eye of the beholder. Bottom line for me is, how do you put your action plan in place to make it better? Okay, let me go in here. I've got a whole bunch of other stuff I wanted to get to, but I just don't have time, and I got to get out of here to do some other pieces and get ready for my class for tomorrow, as I'm talking crypto there as well. Here is your earnings calendar for tomorrow. You did have Canopy Growth come out. I think it was Canopy. Was that Canopy or Cronus reported earnings today, and they missed. They missed badly. I think it was like a 50% miss for CGC, and they were still up. Imagine that you could miss your earnings by over 50% and still have a positive day. That means that people are either priced in atrocious earnings and you just weren't as bad as they thought, or I don't know, someone's messed up on that one. So you have a cannabis company, Aurora Cannabis, tomorrow. You've got the Darling EV company out there, hopefully one of those Tesla killers, coming out tomorrow with their earnings. That's before market open, and then that's pretty much it. ArcelorMittal is going to be a pretty big one as well. That's before market opens, and after market close, you've got the Aurora Cannabis, but these are all really tiny companies. Nothing here is just massive. And here's your economic calendar for tomorrow. There's so many things. I actually split this into 2 pages for you guys. Obviously, the main one is going to happen at 5:30 a.m. Pacific time. That's the CPI number. So they're giving you month over month as well as year over year. So you can see both of those metrics. You also have unemployment claims coming out, which is a normal for your typical Thursday. Mortgage delinquencies will be an interesting one. Now, this is tentative, but I still want to see what this looks like. I think you're going to start to see this number increase steadily going forward as more layoffs happen, as interest rates rise, and people start selling off their holdings to pay their mortgages. I think you'll see the mortgage delinquencies start to surge here in the coming months. Now, you notice at the bottom, you also have 30-year bond coming out tomorrow, or the bond auction tomorrow. You got the federal budget balance, and that's pretty much it for the U.S. On the international front, really a lot of stuff coming out for the UK. I know we got Shinobi Brian here who's over in the UK. You do have some pretty big announcements going on there. You have your GDP numbers, trade balance, construction output, index of services, industrial production, manufacturing production. I mean, it's a big day. And that's all happening at 11 p.m. Pacific time. You're 8 hours ahead, I think. So that puts the 7 a.m. In the UK is when all those announcements come out. So that will be a pretty interesting day for anybody who's looking at the British pound. As far as markets and how these ones have been performing, Todd Davis today was talking about some of these currency pairs that were having some big moves. I guess I can show you some currencies here before we wrap up. When you look at that British pound, we were down at 103. Had a nice big bounce up back to 113, so looking okay. It looks like you're kind of making higher highs, higher lows for the British pound, so that's obviously good. But this economic data coming out tomorrow night could change that trajectory. The US dollar still is the strongest currency out there, but things like the Japanese yen been giving back a little bit of those gains, right? We hit that 152 mark and been drifting down, currently at 146 US dollar against Japanese yen. And I guess the last one here would be the euro. We are back to parity as we speak right now. It is literally hitting parity spot on, well off its lows that we saw back in September, where it was down around 95, 96 cents. Anyway, there you go. That is it for today. Merlin, when you trade hammers and shooting stars, do they have to be at the end of a trend? Well, remember, we don't know that it's the end of a trend, but would I prefer? Yes. So if it's a hammer formation, I'd like to see something in a nice downtrend, preferably a sharp downtrend, and then have a hammer at the bottom. If something's been trending up, I like to see the shooting star at the top of an uptrend, or at least something that's moving, because we don't know what's the top or bottom yet, but at least at the peak of the current run, and maybe it'll ultimately turn into a nice big bullish move or bearish move accordingly. But yes, I prefer to see those. If they're in the middle of sideways range and you get a shooting star or a hammer, they don't really mean much. Not really mean much. I have my Zelensky t-shirt on today? No? But Kramer likes to see us. Oh, maybe that's why iron. Maybe it's Kramer was high when he made the statement, probably. All right, guys, that's going to do it for me for today. Hope you enjoyed it. Enjoy the red wave. We'll get more of clarity as far as what's going on with the elections and who's taking over the House of Representatives or the Senate. If there's any major changes there, that could start to change the economy going forward. But at this point, as a trader, I'm not worried about it. I'm not even really thinking about it at all. I think that you might see a little bit of a reprieve just because it's done and over with. Although we had a lot of pain in that marketplace today that caused quite a bit of fear, seeing 2% plus gain or declines to the south side. Tomorrow, I will go to the topic, as I mentioned. I'll talk about FTX. I'll talk about Binance. I'll talk about its impact on the crypto space and why we've seen 3 of the most catastrophic crypto events happen in the last, since January. 2022 will go down in the books as the most devastating for crypto, but also one of the most important because it'll help shape the framework for what the markets are going to look like going forward for cryptocurrencies and digital assets. That said, everybody, have a fantastic remainder of your evening. If you got comments, send them in to TraderMerlin@gmail.com or put them down below any YouTube video. I'll let you guys know about the trade plan piece as well. I got to finish all that part. So thank you guys so much. Have a fantastic day. I will see you tomorrow. Take care.